See you. Good morning. Happy Friday Focus, Friday the 8th of April. I hope you're all well. In a week's time, it's going to be Easter. God, isn't that frightening? Anyhow, I hope you've all had lovely weeks. As you can see, I look like death warmed up. I'm sorry. I'm on enforced 5-day leave, sick leave at the moment. My doctors have told me I have to do it whether I like it or not. Otherwise, I won't get to America on the 20th of May, which is my aim at the moment. It's been postponed so many times, we don't know whether we're coming or going. So anyhow, how are you all? Happy New Year tax year. Obviously, it's not a particularly happy new tax year, but it is new tax year. So what's happening in the new tax year? National insurance is going up. In fact, everything's going up, basically. Dividend tax is going up. So if you are a lower rate taxpayer, your dividend rate will be going up from 7.5% to 8.75%. And if you are a higher rate taxpayer, it'll be going up from 32.5% up to 37.75%. Not a huge amount, but it's still going to make a difference. So if you need some help working out what your potential tax calculations are likely to be, please do let me know. Very happy to help. So I have a new course coming out in about 3 weeks' time, I think it is, 2-3 weeks' time. I can't remember exactly what date it is, called Cash Management, A Fresh Perspective. And it's all about Profit First and how it works for you. And it's a self-study course. You do it all on your own. It takes about 6 weeks, roughly speaking. But every fortnight on a Wednesday at 6 o'clock, you get me for an hour for any questions and answers you might have. And then at the very, very end of the course, once you're done, you get me for a whole hour and a half for a one-to-one to go through any questions, any issues you've got, or we can set it up for you, whatever it is that works best for you. So keep an eye on the website because you'll see that it's all coming live very soon. So what are we talking about today? We're talking about how to use Profit First method as a solopreneur. This is so important. So you've all heard me talking about Profit First and how it works for you and what it does for you. But I'm going to talk to you as getting Profit First set up as a solopreneur, which is really, really important. So Profit First is a method of a cash management method, not an accounting method. Please do not get it confused. It's a cash management method to waterfall your money into different pots. So you have a profit pot, tax pot, owner's pay pot. It means that you are, for a start, taking your profit out first, hence why it's called Profit First. Secondly, you're putting money aside for your tax, so you don't have to even think about your future tax liabilities. And thirdly, and I don't know which order those two should really go in, you're paying yourself properly. Now, more often than not, when we're running a business, we are the last people to be paid. We pay our suppliers, we pay our employees or our freelancers, whoever it happens to be. And then, oh, gosh, yeah, we pay us. Probably not very much. This is a way of making sure that you're putting the money aside every single week or fortnight, depending on when your rhythm happens to be set up, so that you are paying yourself exactly what you should be paying, preferably more. I've gone from, when I first set this up, paying myself the usual minimum director's salary, and then taking whatever I wanted to take out as dividends, which is still, roughly speaking, what I do. But I'm now actually paying myself a proper salary as an accountant and a business mentor, because if I don't do that, then what's the point in running my business? Anyhow, so how do you use Profit First for solopreneurs? Profit First method is increasingly popular, and it's used all over the world. But it was designed originally by an American guy who's an entrepreneur called Mike Michalowicz. He wrote the book about, I think it was about 10 years ago. It's been an Amazon bestseller ever since. But he wrote it with small businesses in mind. In fact, one of his many sayings is to eradicate entrepreneurial poverty. And I think it's quite a good way of doing it, actually, or saying it. So solopreneurs can really benefit from Profit First. But if you read the book, you'll see that it's written for American businesses. And I've adapted everything so it's much more suitable for UK businesses, whether that's sole trader or limited company. So as a solopreneur, you can still be a limited company. It makes absolutely no difference. So how does it work? It's typically defined as a profit is usually defined in any accounting system. Profit is usually defined as revenue minus expenses. That's how it is. That's how it's always been. It's called the generally accepted accounting principle, and that's what it is. Profit first flips this equation completely. So it's revenue minus profit equals expenses. So we take out our profit first. Whatever's left over is our expenses, and that's left over to pay for any bills. Mike McCalebitz argues that businesses should always take profit first rather than treating it as a leftover amount. It's based on something called Parkinson's law, a psychological principle that works on that work expands to fill the time available. So as a business owner, your costs will expand to fill your budget. If you've got less in that account, then you can't pay any more expenses. So if that money has already been moved into a separate account, out of sight, out of mind, then it means that whatever's left over is left to pay for your expenses. So in order to use the profit first method, business owners typically set up 5 separate accounts. You do not have to set up 5 separate accounts. I would always suggest that you set up 3 for the absolute push. You can then, once it's working for you, you can then set up the advanced profit first and set up as many accounts as you like. Someone like Mike McCalebitz, he's got many, many businesses, but one of his businesses has got 17 accounts. Personally, I couldn't cope with that. So what you do is, in my case, I have a Lloyds Bank account. This is where all my income comes out of, and this is where all my payments go out of as well. So everything comes in and out of Lloyds. I then have a Starling account, which has got various different pots in it. So I've got a profit, I've got tax, I've got owner's pay. I have a team one and I have a VAT one because I'm VAT registered. The most important ones to set up are your profit, your owner's pay, and your taxes. Those are the most important ones. Now, if you read the book, he'll say you've got to set up an income one and an OPEX one and all the rest of it. Personally, I don't think you need to. I think it's better to keep it so all the money comes into one account and all the money goes out of that account. So anything that's going, in my case, from my Lloyds to my Starling is literally just a bank transfer, and that's all it happens to be. So you've got your income pot, your normal pot, account, sorry. You've got your profit pot, your owner's pay pot, and your tax pot. Now, what we do is we work out your predetermined percentages depending on where you are in your business, whether you're just starting, whether you're keeping going, whatever it happens to be, it doesn't make any difference. You can start this at any time. We set out your predetermined percentages and we set up a rhythm and routine for you to work on. So that could be weekly, it could be fortnightly, it could be monthly. It depends on when your businesses actually receive the income. So my business receives the income all through the month. So I do this on a weekly basis because it means that I'm much more in control of what's going on, which I think is perfectly acceptable and it works for me. If it doesn't work for you, you set it up to work for you. So why does Profit First method work? One of the biggest benefits of Profit First system is that it helps business owners stay really disciplined and avoid overspending. It also has really huge benefits for your mindset. By putting the system into practice, you're setting a really strong intention and being purposeful about profit. And finally, the method also takes the guesswork out of your profit, your taxes, your expenses, everything. So it's really easy to stay organized. So how can you adapt Profit First as a solopreneur? You might find that the basic Profit First system works perfectly for you, but you may also need to tweak it slightly. So for example, if you are a remote worker with very, very asset-light business, your operation expenses may fall well below your normal 30% of your gross income. So depending on what your income is, you might not need to set up as much of 15% aside for your taxes, or in some cases, you may need to allocate a larger percentage. But to replace your former day job salary, you might also need to set aside more than 50% of your income for your salary and your wages. But if your overheads are low, it should be really easy for you to adjust this percentage. And obviously keeping your overheads low is really important. As a sole trader, the key to making Profit First system work for your business is knowing your numbers. So in order to understand which the percentages are that are going to work best for you, you've got to keep a really careful track of your income and your expenses using some sort of accounting software, like a cloud accounting software such as Xero or Free Agent or QuickBooks, if you must. But if you can review make sure that your cloud accounting system is kept up to date, make sure that all of your reports are correct. I mean, best thing ever is to make sure that you've got an accountant or bookkeeper who can keep this up to date for you. So what I do is on a Friday morning, I go through all of my Xero account, make sure that all of my debtors have been sent their statements, if there are any. All my creditors are paid and up to date. I then go to my bank statement and I see what money has come in between the last time I did an allocation, which for me was last Friday. And then I work out my predetermined percentages to transfer that money from my Lloyd's account to my Starling account and into the pots. It takes about 10 minutes to get Profit First working for you. Now, anybody who knows me knows that when I started doing this in 3.5 years ago, gosh, yeah, 3.5 years ago, the very first time that I took my distribution from my profit, you take out 50% of whatever's in your profit pot once a quarter. And the very first time I did this, I bought a bottle of wine, a piece of carrot cake, and I had a really nice magazine. By the time we got to the end of March 2020, I had put enough money aside in that profit pot to take out half of whatever was in there. And what I did with that money was I spent it on an amazing holiday to America, which was supposed to be in September 2020. 16 days going down the Pacific Coast Highway. Anybody who knows me will know I have a real thing about bridges. So this is a really, really big thing that I wanted to do for many, many years. And I paid for that in full. In full. That's everything that we need for that whole holiday in full, because I had set up Profit First. Now, if I hadn't done that, there's not a hope in hell I would have been able to pay for it in one go. Not a hope. Okay, we haven't actually been able to get to America yet, but fingers crossed, we are going on the 20th of May this year, and I am getting so overexcited. But the wonderful thing is that I have been paying myself properly. My tax is already saved up, and that holiday is being paid for in full. So if you want some more help with Profit First, how to set it up for your business, how to make sure that it works for you, then please come along and say hi. Go onto the website, book a call with me, discovery call. It's completely free of any obligation whatsoever. Just let me know if you'd like to do it. Thank you. Bye.